In this video, we're going to be talking about the expanding triangle, also called the broadening top or bottom. It's primarily a continuation pattern, and actually identifying this pattern can be quite difficult, especially if you don't have a lot of experience or haven't really practiced patterns too much, right? If you really want to get this pattern down, recommend going through a lot of charts and like separating the impulse from the pattern as much as you can, so it's easier to identify this pattern, because it can have a huge payoff, especially with the way that I like to use this. And I will say this particular pattern is actually my favorite pattern, and hopefully you'll see why in a second. But just like every pattern, first we need an impulse. We need an impulse telling us the direction of the market. Go back to that first lesson where we break down the 3 behaviors of the market. That is really the core of everything that we do, right? Okay, so just like the triangle has an apex, but the difference is the apex actually starts at the end of the impulse. Okay, so we have an impulse coming down, and our apex is right here where the triangle meets, right? It starts off at a point of the triangle, and then it broadens as it moves further to the right. Okay, that is why it's pretty much called the expanding triangle. I prefer the term expanding triangle, but also there's broadening top and broadening bottom, which you'll be able to locate that on FinVids under that name. Okay, but basically how this pattern forms, just like any other pattern, you have 2 lows, 2 highs, but this is essentially how it starts off forming, right? Typically, a majority of the time, it's going to start off going down first, and then you'll have a high here, and then when price comes back down to potentially meet this low here, making it equal low, it will break below that low, but it will break below it still correctively, right? All these blue lines that I'm showing are small candles that are staggering back and forth. So it's going to be small candles that breaks this low here, and then price will come back up, and right as it reaches this high here, it will break above it. Okay, and then at some point it will actually turn around, potentially breaking this low again here. Okay, and this can do this for actually an extended period of time, just bouncing back, breaking the previous high, breaking the previous low, right? And obviously it's not trending because it's not a series of higher highs and higher lows. It's a series of a lower low, a higher high, a lower low, a higher high, right? It's just going back and forth, really just consolidation, which is really what these patterns are. Okay, so, and that is where we get this triangular shape, starting with the apex and then expanding out. Okay, and the reason I love this pattern is because every time it comes back up, at least in this bearish scenario, it's giving me a better price to actually sell this pair at, as opposed to selling it here. I know, okay, potentially price could come back up and give me a better price to buy it at or to sell it at. Up here, offering me an opportunity to capitalize off of a larger move once it finally pushes down, or if it actually finally pushes down. All right, that's essentially the broadening bottom or expanding triangle. I will most often call it an expanding triangle. In this case, it's a bearish expanding triangle, and if we were to look at it in a bullish form, all we have to do is invert the chart here, and this is it in a bullish form. All right, pretty straightforward. Now there are a few advanced tricks that you can capitalize off of in order to maximize or be exposed to more opportunities within this pattern, but I'll go over that in a different video because it is a little bit more detailed. And if you do check out FinVids, there is a little bit of that, but like I said, I will do a full analysis on that. But let's go ahead and go down to the chart. I already pulled up an example here of an expanding triangle, and we'll look at it on the 4-hour time frame. So here we have a pattern that just played out. We got that continuation, and we're waiting for this next pattern to form. So let's go candle by candle, and we can see, let's go to the 1 hour, maybe a little bit clearer. You can see price is moving with consolidation, but it's really just going low, right? You can see we had a low here, price kind of made a high here, and now it made a lower low here. Okay, so it's not much we can do. Really all we have right now is that little slope there, so we do have a potential descending channel, but we want to see if price comes back up and at least reaches this previous high here and see if it breaks above there. So let's continue playing candles. We see price came back up. Let's see if it breaks above this area here, and it does, so it made a higher high. Okay, so now we have a potential expanding triangle on our hands right here. So we can start from the apex of the triangle. All right, and you can draw this all the way out if you want to. There's really no need to, but you have that higher high, so you can connect those. Price hasn't really turned around yet, so that's not a solid line just yet. Price now turned around with an engulfing candle, and now we have this potential expanding triangle here. Now after you see this potential expanding triangle, you look at the previous impulse, you look for the market to go down. It's a bearish expanding triangle, right? Impulse telling you the market wants to go down. You have a corrective continuation pattern, so that means sell. Okay, so at this point obviously we want to look for our kill zone. We see prices came up to that area, so this would be an area of high interest to actually sell. And you can see we have two high touches, and we have 1, 2 low touches, right? So that would be a valid entry point to sell at. Okay, but like I said before, price can continue doing this for an extended period of time, so there is still a possibility that price could come down here and then come back up and then continue doing that for a period of time. But let's see what happens. Okay, price did actually come back up. We still have this formation. Price has not broken this pattern yet. It's still acting within this pattern. So let's see if price gets back up to this high here. And it does not. So if you took that entry, that would have been the best price to actually sell that at. And we see price has broken the pattern at this point here. And let's see if it continues down. Came back up. It does. All right. Now this is my favorite pattern, and I'll explain why in a second. Or I pretty much already explained why it's my favorite pattern. Really because you can get a better price the longer you wait for the pattern to form, pretty much, right? And yeah, so it is a bit risky. Like with any pattern, you don't really know when it's going to turn around. You don't really know when it's going to happen, but with the confluences that we have in our system, the impulse, the pattern, the kill zone, the Fibonacci's, and the JCP, the final confirmations to tell us to enter, that's all going to help you and put the odds in your favor so that you can get a pretty good idea or have a high probability chance of the market going in your direction after taking that trade. Okay, and like I said, there are a bit of few advanced materials on this, which I'll briefly go over or show you really quickly. You can see here price came back up to the entry zone, but basically price just did a quick fake breakout of this pattern, came back up to the zone, and then came down. Now when it came down, before it broke the pattern here, it gave us a little flag on a lower time frame, and a lot of times, not all the time, but a lot of times price will give you this flag before it breaks out. Obviously you won't get the ideal entry up here, but it is another opportunity for an entry as opposed to waiting for a breakout of this expanding triangle. Because when you do wait for, if you do wait for a breakout of the expanding triangle, you're not going to get there's a lot of ground that you give up in that scenario. For instance, instead of having this entry up here and catching a potential 240 pips, you get an entry here. My fault. You get an entry at the breakout, and that same move is only 113. All right, so you do give up a little bit of ground, and it's not as solid a stop loss to place there, because with our entry up here, our stop loss would be above the Fibonacci's. Okay, but that's just a little bit of how you can take a little bit more advantage of the expanding triangle. And again, go to FinVids if you want to learn more about that, or even the most likely target, right? The target you should be looking for in the expanding triangles, finvids.com. Now the homework on this, just like the other pairs, find 5 expanding triangles on 5 different pairs. You want to put as much practice in as possible. And also we got that challenge, find every expanding triangle on the 1 hour time frame on GA or GN, right? My eyes, I notice expanding triangles most often happen on GBP pairs, and the two that they happen the most, at least for me, are GBP NZD and GBP AUD. And that's why those pairs were really my favorite for a long period of time, because I got my favorite pairs or my favorite patterns so often. And obviously GBP pairs are crazy with with the volatility. So I kind of like that when I first got started into trading. But if you have any questions, go ahead and message me. Hope this helps, and I hope you guys are able to utilize this pattern and love it as much as I do. Catch you guys in the next one.